Is our Ron Shaw, founder and managing partner of Gina Ventures, along with Gary Gordon, president of Pacific Park Financial. Nice to see you both. Gary, let's try and massage the markets at the moment for the visual perspective for investors here. What do you see in the next couple of months when we have pretty weak retail sales numbers today, but then you have the International Monetary Fund, not that they've been right on many occasions, but they're saying that the global recession is starting to wane a bit. What do you see?
Well, I see a trading range basically taking place for the duration of the summertime. What you have is excessive focus on the economic situation. We've already been through the recession's not as bad as a Great Depression or even a Great Recession. So you had a 30% run up off the bottom, but then you have a period of time where we've just been in a slumber for the last 8 weeks. So what's really happening is people need to see more. It's kind of a show me market, and we've technically tried to break out through the S&P 950 level. Hasn't happened. We pushed it 3 times. It hasn't happened, and we're in a corrective phase. But the idea that we would go down to new lows is pretty far-fetched from my vantage point, which is why I say a trading range, simply because of the psychology of investors. Most of the people I talk to, clients, readers, listeners, they are telling me that they want to be back in this market, but do it more cautiously. They want to lose nothing and make something, and
well, they say, show me the money. I mean, they really want to see specifically where the money is. And Ron, U.S. brands, there's nothing like a strong brand. Everybody loves it. In fact, Warren Buffett always, everybody, all the top stock pickers talk about strong. You think there's going to be a resurgence of some top U.S. brands, including one in particular I want to talk about, FedEx, which has been beaten down a little. You think it's going to rise again?
Yes, I think it's at a great valuation level right now, FedEx. And again, back to the point of brands. The brands are the heart and soul of this country, and I think that's really going to drive the growth in the future. As America, as our nation wants to prosper and revive ourselves, we've got to take our international brands, we've got to take them international, get market share overseas. That's going to be the key to our growth in the future.
And you have some funds that are India focused, for example.
Yes.
And boy, if you look at the Sensex index, that has taken a huge dip from its highs and then punched all the way back up.
Yeah, let's talk about that. I think that's a very interesting thing to talk about. Now, the Indian market took a big dive this week because of the budget. Now, everyone was concerned that there's going to be even a wider deficit in India, but what's going on there really is what's happening that they're investing in the poor. They're investing in the rural areas. They're making future consumers. So it's a long-term growth story for India. So I think valuations are very attractive.
All right, well, Gary's not going to give you an argument, right, Gary? You've got an ETF, the GMF, the Emerging Asia Pacific market that you're hot on. Why?
Exactly. No argument at all, because all of the growth is going to be coming from overseas. I'm happiest about what's going on in China, but because you don't want to put all your eggs in one basket, GMF is the ticker symbol. Emerging Asia Pacific, SPDR, State Street, is the fund that's going to give you exposure to both China and India, as well as Indonesia and Malaysia, as well as Taiwan. So that's the region of the emerging area that you probably should be focusing on as far as the best prospects for growth going forward.
Look at a big jump today, 2.5%. Thank you, guys. Ron Shaw, Gary Gordon, good to see you both.
Thank you.
Thank you.
Time to think.